Massachusetts real estate didn't cool. It recalibrated, and the next move may run straight through Worcester, where projections for 2020 6.25, 6.5, 15% growth. Start with the scoreboard. In 2025, single-family home prices in Massachusetts rose 3% year-to-date. In Greater Boston, the median single-family price hit $800,000 as of October, a nearly 5% rise for the region. That's the city and its suburbs setting the pace. Statewide, October brought 3,921 closed single-family sales, up 5.6% year-over-year. The median price on those single-family deals reached $660,000 in October, up 2.3%. Condos told a tighter story. Closed sales slipped 1.1% that month, yet the median still climbed to $549,900, up 2.8%. Rewind 1 month to September 2025. Closed sales increased 4.8% for single-family homes and 6.4% for condos. The statewide single-family median in September was $654,500, up 4.7% year-over-year. Condo median? $525,000, 1% higher than the prior September. Supply remained the drumbeat under everything. Single-family inventory fell 4.2% year-over-year in September, while condo inventory rose 5.1%. New listings offered a glimmer. Single-family properties coming to market increased 7.5% year-over-year in September, and new condo listings jumped 13.3%. In a market still starved for choices, those upticks mattered. Why the resilience? The price tag is everything. Inside Boston, there are still relative deals, relative being the operative word, in Hyde Park, Roslindale, Dorchester, Mattapan, and parts of East Boston. Beyond the city line, the Metro West stands as a real option for some buyers, even as prices vary block to block, town to town. The gravitational pull has been outward for years. Now, it's measurable. Signals suggest that Worcester sits at the crossroads of that shift. A projection for 15% growth in 2026, a number that blends existing home sales and median sale price into one figure. Providence-Warwick isn't far behind on the same metric, projected at 11.2%. Under the surface, policy is moving. At least 165 cities and towns have created some level of zoning for multifamily housing under the MBTA Communities Act. Cape Cod officials have declared a housing crisis, drawing attention and urgency to places where the workforce and the housing stock no longer match. Signals of a vibe shift are emanating from Beacon Hill, where housing has taken center stage. The message is simple. If you want affordability, you need supply. If you need supply, you need zoning and permits that make it legal to build. Even with policy aims sharpening, the market is still teaching micro lessons week by week. September poured fuel on one of them. Price it right. Goldilocks pricing, neither too high nor too low, drew buyers in and moved product. The proof was in the percentages. A 4.8% lift in single-family closed sales and a 6.4% lift for condos, month-anchored to month, year-over-year. Then October kept the momentum with 3,921 single-family homes sold and a 5.6% year-over-year gain in closings. Set that against the national backdrop. Over half the homes in the United States lost value in 2017. Yet the typical U.S. base trip in downtown Boston Basin for everything. Home value in November stood at $360,782, only 0.2% higher than a year earlier. Massachusetts diverged. Town by town, the numbers stacked up higher. In Weston, the typical home value was $167,570 in November 2025, up $82,624 in a year, a 4% climb, and up $804,519 over 5 years, a 59.0% surge. In Wellesley, typical value hit $1,932,908, a $67,667 gain in a year, and $623,339 over 5 years, or 47.6%. Newton reached $461,113, up $51,806 year over year, and $402,492 over 5 years, a 38.0% rise. The map of Massachusetts wasn't flat, it was tilted upward. Drive southeast and you hit Norwell, where the typical home value posted $1,000 and $2,800, a $56,407 increase in a year, 6%, and a 5-year climb of $346,475, or 52.8%. Coastal Situates landed at $963,151 in typical value, adding $29,966 in a year, and $321,717 over 5 years, a 50.2% gain. Duxbury crossed the seven-figure line at $1,580, up $33,933 in a year, and $385,808 across 5 years, a 57.4% swell. Cohasset reached $1,361,625, up $42,458 year over year, and $463,855 over 5 years, or 51.7%. These are not isolated outliers. They sketch a coastline where price growth has been durable. Turn inland. Berlin in the Worcester metro stood at $647,851, up $20,797 in a year, and $189,136 over 5 years, a 41.2% increase. Longmeadow near Springfield posted $516,166, climbing $23,062 in a year, and $154,237 across 5 years, up 42.6%. Hopkinton hit $928,300 with a $22,225 one-year gain and a 5-year rise of $290,212, or 45.5%. Boxford registered $1,030,736, rising $37,236 in 1 year and $322,640 in 556% leap. Needham came in at $1,477,660, adding $35,577 in a year and $465,159 over 5.9% march upward. The Cape and the Islands tell their own story in the same numbers. Provincetown in the Barnstable Town Metro logged a typical value of $1,229,909, with a $22,762 year-over-year rise and a $354,630 five-year gain, a 52.5% move. Chilmark on Martha's Vineyard hit $2,320,832, adding $49,811 in 1 year and $749,000 across 5, up 47.7%. The Berkshires had their moments too. Egremont posted $784,164 with a $41,260 one-year jump, 5.6%, and a $306,639 5-year increase, a 64.2% gain. Mount Washington stood at $617,542, rising $35,985 in 1 year, a 6.2% pop, and $191,974 across 5 years, a 45.1% build. The North Shore and Route 128 corridor kept pace. Lexington reached $1,520,479, gaining $46,139 in 1 year and $462,826 in 5, up 43.8%. Lincoln stood at $1,474, up $55,848 year over year, and $483,997 over 5 years, a 49.0% rise. Concord registered $1,401,330, adding $42,117 in a year, and $480, $3,330, $500 over 552.7% higher. Winchester posted $1,480 to $7,257, up $28,835 year over year, and $413,724 across 5 years, a 38.5% climb. Andover came in at $956,045, with a $28,535 yearly increase and a $306,273 five-year gain, or 47.1%. What about the places that felt attainable pre-pandemic? Marshfield's typical value reached $761,509, up $22,097 in a year, and $253,571 in 5, nearly 49.9%. Reading hit $878,046, adding $20,519 in a year, and $246,921 across 5 years, a 39.1% rise. Pembroke landed at $642,440 with a $20,577 one-year gain and $186,775 over 5 years, or $40 1.0%. Hanson reached $591,955, up $20,317 in a year, and $173,282 across 5, a 41.4% climb. Berlin's $647,851 was already mentioned, but consider nearby Merrimack at $641,036, up $20,844 in a year, and $191,536 across 5 years, or 42.6%. Show that graph against the national line again. The U.S. typical home value in November was $360,782. Weston's typical value was $2,167,570. Wellesley's was $1,932,908. Even towns squarely in the middle of the Massachusetts market. Hopkinton at $928,300, Watertown at $812,810, Danvers at $708,724, stand multiples above the national median. Watertown rose $20, $2,611 in a year, and $165,659 over 5 years, up 25.6%. Danvers added $20,090 in a year and $180,612 across 5, 35.5% higher. The gap explains the behavior. Buyers push outward, and sellers who meet the market are rewarded. There's another lever quietly adjusting the scene: borrowing costs. The average long-term mortgage rate recently clocked in at 6.23% after a prior reading of 6.26%. 4 readings earlier, it touched 6.17%, the lowest level in more than a year at that point. 1 year before that 6.23% print, the average stood at 6.81%. For 15-year fixed loans, the rate was 5.51% after 5.54%, compared to 6.10% a year earlier. When mortgage rates ease, purchasing power lifts even a few tenths of a percentage point, builds dollars into a buyer's budget. Easing rates this fall helped lift sales of previously occupied homes in October on an annual basis nationally for the 4th straight month. In Massachusetts, the sales pulse was already quickening through September and October, and those rates added a beat. The forward view for 2026 is clearer than it has been in years, and still fragile. Forecasts anticipate a great housing reset taking shape, with rising incomes, declining mortgage rates, and potential action by lawmakers shaping the path. The same outlook cautions that the recovery should be slow, with existing home sales remaining well below normal and broader political and economic risks keeping the edges of the forecast unsteady. Within all that, certain Northeast markets are poised to run. Worcester is one of them for Massachusetts, flagged for notable home sales growth and a combined 15% rise when sales and prices are added together. Providence-Warwick, which spills across Rhode Island and Massachusetts lines, is tagged at 11.2%. Hartford and Rochester are on the Northeast list too, named among places where prices could rise roughly 10% in 2020. Six part of a regional canvas where value is still measured in square footage, commute patterns, and the reach of a commuter rail map. Meanwhile, signals suggest some southern metros could cool. Nashville is one, along with San Antonio and Austin in Texas, and Fort Lauderdale, West Palm Beach, and Miami in Florida. Among sales trends specifically, Miami tops the list of cities expected to see the largest decline in home sales compared to 2205. Orlando, Jacksonville, and Daytona Beach also line up for potential sales dips, alongside Greensboro in North Carolina and Greenville and Charleston in South Carolina. On the price front, metros in Florida and California could face outright declines. Cape Coral, Sarasota, Tampa, Daytona Beach, Stockton, Sacramento, and San Francisco are among those where median sale prices may drop. Those shifts matter to Massachusetts for one reason. The Northeast stands to catch some of the buyers and sellers who recalibrate their ambitions and their geography in response. Back home, the neighborhood-by-neighborhood map is still shifting. In Boston, relative deal isn't marketing speak, it's math. Hyde Park presents single-family streets that sit well below the $800,000 Greater Boston single-family median recorded in October, even as costs pressure every quarter of the city. Roslindale and Dorchester offer multifamily options that, for some buyers, make numbers work where single-family budgets don't. Mattapan has seen investor attention, but owner-occupants are active there too. Parts of East Boston remain an entry ramp for buyers who want city living under downtown price points, even as waterfront and transit access create competition. The presence of those options keeps demand inside Boston. The absence of enough of them pushes buyers to Worcester, to Salem, to Leominster, to Haverhill, and beyond the Route 128 belt. Towns and cities where typical values still begin with a 5 or a 6, not a 9 or a 1-point-something million. The data from November 2020-2000 adds texture to that map. Wayland sat at $1,119,875, climbing $19,341 in a year and $354,235 in 5 years, a 46.3% rise. Belmont posted $1,397,626, up $20,603 in a year, and $339,633 in 5/30, 2.1% higher. Arlington was $1,393 with a $25,368 gain in a year and $244,768 over 531% above its 5-year-ago mark. Newton's $1,460.13 and Lexington's $520,000. Framed a corridor where the typical home value added $50 and 8 cents, $46, $130, respectively, in just 12 months. And on the coast, Hingham reached $1,260, $4,218, up $28,161 in a year, and $421,044 across 5 years, a 49.9% rise. Look to the North Shore's Manchester at $1,271,507, adding $53,310 in a year and $442,545 in 5 years, 53.4% higher. Wenham posted $1,028,647, up $47,202 year over year, and $367,894 across 555.7% higher. Marblehead reached $997,637 with a $22,648 yearly increase and $280,281 in 5, a 39.1% climb. Newbury came in at $908,599, rising $23,416 in a year and $308,176 across 551.3% above its 5-year start. Newburyport landed at $906,700 $16, up $25,983 year over year, and $293,867 in 5, a 48.0% gain. For buyers tracking mid-tier towns, Rowley posted $776,628 and a $21,226 one-year climb. Danvers had $708,724 with a $20,099 increase. West Bridgewater registered $57073, $5, up $21,615 in a year, and $163,675 in 539.6% higher. Hanson stood at $591,955, up $20,317, while West Newbury's $919,170 rose $19,999. Berlin's $647,851 and Merrimack's $641,036 underscored the Worcester and North Shore fringes, where typical values still sit under $700,000 and crept higher by around $20,000 to $21,000 over the year. Then there are the outliers that define aspiration. Dover reached $1,704,854, up $63,022 in a year, and $537,076 in 5, a 46.0% rise. Lexington's $1,520,479, Wellesley's $1,932,908, Weston's $2,167,570, and Lincoln's $1,470. $924 carve out a tier where the one-year increases $46,139, $67,667, $82,624, and $55,848 represent nearly the whole purchase price of a Midwestern home in November, when the U.S. typical value sat at $360,782. The 5-year gains, $460 a dollar, $826 in Lexington, and $804,519 in Weston, tell you why inventory remains tight. Owners sitting on those gains think twice before trading into a new mortgage. They hold, and the market waits. Despite that hold, September 2025 offered sellers a clear template: right price, right moment. New single-family listings rose 7.5% year over year, condos 13.3%. Buyers met the moment with 4.8% more single-family sales and 6.4% more condo sales compared to September 2024. Then October kept the energy, not just in the 3,921 single-family closings, but in the climb to a $660,000 median. Condos showed their own signpost with a $549,900 median in October after $525,000 in September. Even with a 1.1% dip in condo closings in October year over year, the pricing strength signaled demand under the surface. At the policy level, the MBTA Communities Act is not just a headline, it's a map of future projects. With at least 165 cities and towns creating some level of multifamily zoning, the ground is being prepared for new supply. Not overnight, not everywhere, but zoning is the bottleneck before a shovel hits dirt. On the Cape, a declared housing crisis sharpened the urgency. Signals from Beacon Hill, where the conversation has moved from diagnosis to prescription, suggest that housing remains a front-of-mind lever for the Commonwealth. If the zoning numbers translate into permits and permits into starts, the inventory story could look different 18 to 24 months from now. Link all of this back to Worcester's projection. A 15% figure for 2026, built from existing home sales and median price movement, implies two things: buyers see value and sellers have product to move. Worcester already sits at the intersection of the Boston commute, the New England knowledge economy, and a price bracket that still, in many neighborhoods, begins with a 3 or a 4 rather than a 7 or an 8. Berlin's $647,851 typical value speaks to the Worcester area corridor, where $20,797 year-over-year growth is meaningful but not crushing. In that space, a few tenths of a point on a mortgage rate, say from 6.26% to 6.23%, moves households from pre-approval to keys in hand. The projection makes sense when you match it to the numbers around it. Providence-Warwick's 11.2% projection for 26 runs on the same current, commuter reach, relative value, and steady price appreciation underpin both metros. For Massachusetts buyers weighing Boston neighborhoods versus regional anchors like Worcester or Providence's orbit, the calculus in 2025 and 2026 is not just about square footage, it's about what a monthly payment looks like at a 6.23% mortgage rate versus a 6.81% rate a year earlier, or a 5.51% 15-year compared to 6.10% a year back. Every 0.25% opens or closes a door. The coastal towns add nuance to affordability strategies. Marshfield at $761,509 and Scituate at $963,000. $151 offer a visual of two coastlines, one where the typical value rose $22,097 in a year, the other where it rose $29,966. Cohasset's $1,360, $2,620, $5 posted a $42,458 O-year increase. Hingham's $264,218 rose $28,161. For some buyers, this is the downsizing market, selling in Wellesley at $1,932,908 and buying in Marshfield, and for others, the aspirational move-up market. The 5-year numbers close the loop. Scituate up $321,717, Hingham up $421,044, Cohasset up $463,855. The scale of those gains traps some owners in their equity and tempts others to monetize it. The western half of the state brings a parallel story at a different price tier. Longmeadow at $516K, $166, up $23.62 year over year. Stockbridge at $727, $467, up $22,579, and Egremont at $784,164, up $41,260. Each rose faster than the U.S. aggregate of 0.2% in November. In Pittsfield's orbit, Mount Washington's $617,000, $542, and a 6.2% one-year gain showcases the faster line on a slower, smaller chart. Over 5 years, Egremont's 64.2% gain outpaced Weston's 59.0%. The percentages tell you something the dollar figures hide. Momentum exists across price bands. To pull the lens back to 2026, the forecast paints two lines on the same canvas. One line points higher for the Northeast, Worcester's 15%, Providence-Warwick's 11.2%, Hartford and Rochester in the roughly 10% price growth conversation. The other line points down in parts of the South and West. Miami and Orlando potential sales declines, Cape Coral, Sarasota, Tampa, Daytona Beach in the price drop discussion, Stockton, Sacramento, and San Francisco the same. There's even a separate list of buyer-friendly metros: Miami, Austin, Nashville, Tampa, San Antonio, where the balance may tilt toward those making offers rather than those fielding them. If those trends play out, some capital and some households will look north. The base case for Massachusetts into the end of 2026 is steady. The September and October data showed demand present and responsive. 4.8% more single-family sales in September and 5.6% in October. Medians at $654,500 in September and $660,000 in October. Condos at $525,000 and then $549,900. Greater Boston's $800,000 single-family median as of October underscores the affordability pinch that pushes buyers outward. Predictions for 2026 suggest improving conditions for buyers, more choices, and slightly lower cost burdens, even as the recovery remains slow and existing home sales stay below normal levels. In that environment, Worcester's 15% outlook is not an isolated bet. It's a signpost. There are risks and watch items. First, the path of mortgage rates. A reading at 6.23% is meaningfully below 6.81% a year earlier, and 4 readings earlier dipped to 6.17%, the lowest in more than a year at that point. If rates drift higher, purchasing power will recede. If they drift lower, budgets expand. The difference between a $654,500 median in September and a $660,000 median in October can be made or erased by a few tenths of a point in financing. Keep an eye on that spread through spring and summer of 2026. Second, supply pipelines. September's new listing gains of 7.5% for single-family homes and 13.3% for condos were encouraging. But single-family inventory was still down 4.2% year-over-year that month. Condo inventory rose 5.1%. If new listings falter in winter and don't return by March, the competitive pressure returns by May. If MBTA Communities Act zoning translates into project approvals in the next 12 months, a different spring could arrive in 2027. The count to watch now is 165 cities and towns with multifamily zoning progress and how many permits follow. Third, internal shifts by submarket. Town by town, year-over-year gains in November 2025 ranged from around $19,341 in Wayland to $82,624 in Weston. If the higher end stabilizes while the mid-tier keeps rising, say West Bridgewater's $21,615 and Hanson's $20,317, entry-level buyers could find windows in towns just beyond the usual commute rings. Conversely, if places like Norwell continue to print 6% annual gains alongside typical values at $1,000 and $2,800, move-up buyers may pivot north toward Rowley's $776,628 or inland toward Boxford at $1,030, $730, where a $37,203 one-year increase may look tame against a larger base. Finally, the condo versus single-family split. October showed condo closings down 1.1% year-over-year, even as the median rose to $549,900. September offered the reverse, with condo sales up 6.4% on a $525,000 median. If condo inventory keeps rising, up 5.1% in September, and single-family inventory keeps contracting, down 4.2%, more buyers may choose multifamily living in the short term, especially in Boston neighborhoods like East Boston and Roslindale where relative value still exists. Watch whether condo medians hold above $540,000 through early 2026. That'll indicate whether buyer demand is switching lanes or slowing altogether. The case for Massachusetts in 2026 is a steady hand on a moving wheel. Buyers willing to price risk, reading rates at 6.23% and scanning for 6.17% touches, can grab opportunity in Worcester as that 15% projection draws attention. Sellers who list at the right number, in September's Goldilocks mindset, can ride the demand that delivered 3,921 single-family closings in October and a $660,000 median. Policymakers tracking the 165 communities moving on multifamily zoning can turn momentum into measurable units. And families negotiating Boston's $800,000 single-family median can still find pockets in Hyde Park, in Dorchester, in East Boston, where the math works when the monthly payment meets the salary line. Through December 2026, expect a balance: slow recovery, improved choice, uneven gains by zip code. Base case: modest statewide price appreciation, Worcester outperforming, and Boston's tighter neighborhoods absorbing demand at current medians. Upside: mortgage rates slide closer to 6.0%. New listings sustain September's gains, and condo inventory gives buyers breathing room into spring. Downside: rates tick back toward the high sixes, MBTA Communities Act zoning stalls at the paper stage, and single-family inventory tightens further, reviving bidding wars where medians already sit above $650,000. For now, the numbers tell the story. September's $654,500 became October's $660,000. Worcester's 15% sits on the horizon. Weston's $2,167,570 stakes the high ground, and Longmeadow's $516,166 anchors the West. In between are towns like Marshfield at $761,509 and Rowley at $7,766, $628, each adding around $22,000 year over year. The map is not static. It's alive, street by street, rate by rate, and listing by listing. If you want more clear-eyed, number-heavy looks at New England housing as it evolves, stick with us for the next turn.